In order to determine if clear financial skies exist or it's going to get stormy, the free cheat sheet at CTKSmethod.org is the fastest way of doing this analysis. The cheat sheet is composed of 7 rows. The first 2 rows, row 1 and row 2, measure risk. Rows 3 and row 4 measure market sentiment and global financial health. Rows 5, 6, and 7 measure the new economy, the crypto market. CTKSmethod.org service members get 32 TradingView charts with structural indicators and monthly price paths for each chart of each row. Structural indicators help us to minimize fear in trading and investing. They give X-ray vision into financial charts and help you to stack probabilities like professionals do. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome and welcome back CTKS family. If you missed the TradingView 70% off sale for Black Friday, don't worry, they've got Cyber Monday, so for about 3 days you can get the premium. And I would urge you to get this for the upcoming Profiting by CTKS Method structure course, which you can get completely free. It's a really good idea to get premium because you'll be able to do the charts that I do inside that course. That course will be a game changer for you. To lock in this incredible discount, please visit the description links, and there are other really fantastic links there for you as well. Let's get into the cheat sheet. We're going to start by looking at row 1, which is the VIX, the DXY, dollar yen, the 10-year, the 2-year, and US oil. This analysis is done on a daily basis. The blue line in the background is Bitcoin. Now we can see some pretty interesting things. When we look at the 10-year, it's starting to cut under. We're seeing negative price momentum exist inside the yields. We can also see the dollar yen is coming down, and it's kind of coming down pretty hard. This would suggest that there's more negative momentum inside the DXY. We're getting up to a level, an area where the DXY could be supported just from a retail perspective. The fear gauge of the main markets is incredibly low at the current time. The structural focus right now is on the VIX. The VIX is primarily controlling the crypto market and the stock market in terms of direction and momentum. You'll learn more about structural focus in the upcoming course. And please make sure that you register for the upcoming Profiting from CTKS Methods structure course. You can get it absolutely free, but conditions apply. You'll find it incredibly valuable. Just pop across to ctksmethod.org. Row 2 is junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. One of the things that we have structural focus on in the current period is definitely junk bonds. You can think about junk bonds and the VIX just inverting each other. One thing to just be aware of, there is a whack of overhead structural resistance playing out around the 98 level for junk bonds. The euro dollar has been under tremendous stress recently. The new presidential appointment of Donald Trump and the tariffs and all of the different policies that he's seeking to push forward are strengthening the DXY and weakening the euro dollar and the Aussie dollar. It's useful to think of gold as measuring geopolitical sensitivity and geopolitical risk. At the current time, gold has been retracing. We'll have a look into gold structure and silver structure going forward. One thing to be aware of, when we see cut unders, we generally see negative price momentum carry forward. Copper is starting to base, and for very good reason. There's an absolute ton of structural support around its current levels. All in all, we're seeing the VIX come down and junk bonds going up. That is good for the markets and good for crypto. In order to apply three-dimensional risk management, we do CTKS paths, and they're part of Level 2 standard certification. These price paths help us to predict where the end-of-month price could be at the start of the month. So we draw out these paths and we don't change them. Now, what does it mean for last month? Gold in last month's price action closed out at around the positive price path. It doesn't have to close exactly, it just has to close around it, because these things are about preparing yourself for downward action and upwards action. If you didn't have the price paths there, you wouldn't know if you're following the positive or the negative path, and also where volatility is likely to retrace and structural support is likely to get magnetized back to. We've seen a similar thing on silver. Last month we closed out at that normalized positive price path, and these particular paths are always structurally bound. They're drawn with a knowledge of structure. We can see silver just pretty much followed the normalized negative price path. It's currently 30.62 and the anticipated closeout is 30.17. If you're liking the video so far, please smash that like button and don't forget to subscribe. Hit the notification icon as well. If you want to get a feel across all markets, this is the best place that you could be. Row 3 of the cheat sheet covers off the main market indices, the S&P 500, the Nasdaq, the Dow and the Russell. We can see that there's been a lot of positive momentum inside the S&P 500. We're going to have a look at the S&P 500 structurally because there is a lot of overhead structural resistance. We'll also look at the Nasdaq structural levels, just drawn up in accordance with Level 1 and Level 2 standard certification. What we see inside the Nasdaq is something completely different. We have an absolute ton of structural support. The Dow and the Russell have been doing very, very well. Remember, price is always moving in a wave. It's going up and down consistently all over the place. So what does this mean? Even if price goes up, always anticipate and prepare yourself for a retrace. If price goes down, always prepare yourself for a rally coming out of that as well. It's important to not be too bearish and not be too bullish, just think structurally. Preparing yourself for up and down price volatility is realistically very, very important, and we've seen for the S&P 500 this month, it actually rejoined the normalized positive price path and it's very close to closing out on that end of month value. You can learn to do these CTKS paths yourself by learning Level 1 and Level 2 standard certification. Turning to the Nasdaq, we can see that the Nasdaq has been really powerful this month. It exploded upwards, but it's very close to the normalized positive price path, just slightly above it. The important way to read these price paths, if you're going positive, you're not going negative. So if you were really bearish about the Nasdaq and the S&P 500, you could follow the price path so you could just instill a sense of reality. And of course, that goes the other way. If you were just back in September and you saw that the Nasdaq was going really, really negative and then it turned around, you can just adjust your strategies accordingly. The market price action is reality and we must always obey it. Level 1 and Level 2 standard certification draw what are called Stanfield levels or CTKS levels. You'll see these on the charts that I'm going to show you next. Thicker is always stronger. The definition of Stanfield levels or SLs, they're also known as CTKS levels. They represent the most statistically significant levels where smart money will buy or sell in the future, and thicker is always stronger. These are formed across all of price history in strict accordance with Level 1 and Level 2 standard certification from CTKSmethod.org. Service members get 32 trading view charts with structural indicators and monthly price paths. To gain an understanding of how the major market indices are moving when the main markets are closed, we just look at the futures. We can see the S&P 500 has positive momentum. The Nasdaq is also looking quite positive. The Dow is undoubtedly positive and also the Russell is positive. One of the things that will occur, especially inside the Asian sessions, is you'll get this momentum inside the major market indices transferring into, for example, the ASX and the Nikkei. And of course, later on throughout Europe. It's important to keep your eyes on the futures. Row 4 of the cheat sheet helps us triangulate Row 3, and Row 3 gives us insight into Row 1 and Row 2. Inside Row 4, we're looking at Apple, Microsoft, Tesla, and Nvidia. We can see that Apple has been just going for it. Microsoft's looking a little bit weaker, especially in relationship to Apple Computer. And don't forget, this is on a daily basis, going literally back to the start of August. Tesla is just romping up, and Nvidia was doing really well and has been consolidating. If you're part of the service, just pop on your structural levels here and you'll see that that was very likely because Nvidia has a lot of overhead structural resistance there. Row 4 is confirming risk-on behavior inside and across the markets. Row 5 is all about the crypto market, total crypto market cap, Bitcoin, Ethereum, and MicroStrategy. One thing you'll notice here with MicroStrategy, it's of course following Bitcoin's gravitational pull, and we would expect that. But what happened here, I'm going to actually zoom into this chart and pop the indicator on and give you an insight into that. But first of all, let's just look at main market direction. When we look at crypto total market cap, it's doing very well. Bitcoin is also doing well. We're seeing a lot of upward positive momentum. Don't forget, upward positive momentum comes with pullbacks. Those pullbacks are required in order to digest upward price momentum. This is why we need to look at row 1 and row 2, row 3 and row 4 when looking at row 5, because we know that junk bonds has some steam in it left to go before it hits structural resistance, and the VIX is coming down into structural support, but not immediate. We would anticipate that things could go higher for the crypto market and then start to flatten out. Also, by looking at the structural levels on Bitcoin, we can see that we're in between two gaps at the current time, and Bitcoin has a substantial structural support below it. Downside for any retrace is likely to be limited. This means in the next 24 hours, it's more likely to be positive for the crypto market than to be negative. Now, what I want to do is to just whip in here and look at MicroStrategy. All financial charts are base structure, and when we look at MicroStrategy, we saw this behavior. Now, could we have understood where the structural support and structural resistance levels were inside MicroStrategy before price played out? Yes, we can. And how do we do that? We use level 1 and level 2 standard certification to create the world's most powerful smart money buy and sell level detection system. Inside the service, that markup is contained within the indicator. So let's just pop that indicator on. Now, what are we seeing here? At $540, MicroStrategy had incredible overhead structural resistance. But take a note of this 482 level and this 442 level were really interesting. The 442 level acted as structural resistance multiple times. And when you get sell-offs and into positive and negative CTKS gaps, what you will find is it can overshoot structural support. There was structural support in here, but the press went to absolute town on Michael Saylor and MicroStrategy, saying, why don't you just buy Bitcoin? And that unfortunately happened at a very problematic time when MicroStrategy was in a positive CTKS gap. Now, what does that mean? These gaps that we can see before price actually plays out create incredible volatility to the upside and to the downside. That's why we saw this whipsaw behavior. If you don't know where your structural levels are, you're in a lot of trouble. But if you do, you can prepare for incoming and outgoing volatility and just take advantage of it. Row 6 measures Litecoin, Binance Coin, BNB, Bitcoin Cash, and Ethereum Classic. What we're seeking to do here is to use Litecoin and Bitcoin Cash to indicate where Bitcoin could be going. They're very sensitive to Bitcoin. Ethereum Classic is very sensitive to ETH. And Binance Coin shows the confidence of retail investors into the centralized exchanges. You can see that's not really happening here. What's been actually pushing Bitcoin and Ethereum and all of the different cryptos up is institutional investment. Of course, retail will come later, and there's always retail interest, but it's not translating into price appreciation on BNB. But what we can see here, Litecoin is really going for it at the current time. If we were anticipating a retracement in Bitcoin, which is that blue line, we would absolutely seek to see a retracement in Litecoin. That's not happening at the current time. In fact, Litecoin is showing a different story altogether. The overall direction and momentum for the crypto market and the stock market is currently positive. Row 6 is under the hood of the crypto market: ADA, Cardano, Dogecoin, Solana, and XRP. Wow! XRP has been doing so well. It's literally come up from under 50 cents to over $2. The XRP holders are absolutely thrilled. And ADA has been doing incredibly well. Overall, the components of the cheat sheet are saying that risk-on behavior is anticipated, at least in the next 24 hours.